Hi there, I'm Irk and this is my channel, Get Irked. In this episode, can an apple a day keep the market sell-off away? I'll let myself out. In this episode, I wanted to talk about everyone's big giant company, Apple, ticker symbol AAPL. As you're more than likely aware, Apple is the maker of all things iPhone, iPad, iMac, and more. The company was originally started in the 1980s and is credited with having created the personal computer market for the entire world. And now, Apple is the biggest company in the world, and you probably already own shares in it if you own any index fund, as it is one of the biggest, if not biggest, position in almost every ETF out there that tracks any of the tech or stock market indexes. In the past few years, in addition to being a leader in hardware, Apple expanded into the services industry. In addition to having its App Store, it also released Apple Music, Apple TV Plus, and a variety of other services that have made it so this company makes money from a lot more than just its hardware. In this video, I'm going to go over Apple's fundamentals. I'll give you a buying plan of what I would do if I didn't already hold shares in the stock, and then I'll go over my own position so you can see where I've come from and where I plan to go from here. As you can see, Apple isn't messing around. As the biggest company in the entire world, it has a market cap of $2.653 trillion. And unlike a lot of the tech startups, Apple isn't messing around when it comes to making money either. In its last earnings report, it reported an earnings per share of $5.61. This gives Apple a PE ratio of 28.95. As I've mentioned in previous videos, a high growth tech stock isn't considered overvalued until it breaks 30 on the PE, so Apple is actually reasonably valued at these prices and lower. Another nice part of Apple is it does have a dividend. Now, while it isn't huge at 88 cents a share, it does earn you a yield of more than 0.5%, which is a lot better than a lot of high growth tech stocks that offer no dividend at all. However, even though Apple is considered undervalued when you're talking about its PE ratio, Yahoo Finance's calculations does put Apple as overvalued, which could have a lot to do with both tech selling off and so many people in the entire market owning Apple as such a large part of their portfolios. So from here, let's take a look at Apple on a chart, and I'll show you a buying plan of what I would do if I didn't hold shares in the stock. So to get started, let's use Fibonacci retracement to develop some levels where we could start a position and add to it. And we'll start at the bottom of the pandemic and draw all the way up to the high of 2021 to create some levels where we could buy the stock. You can see that thanks to having decades of price action, Apple really does trade around the Fibonacci retracement levels, as you can see that it found support and resistance around the 23.6% line, in addition to down here at the 38.2% line, down here at the 50% retracement line, and more. And despite the sell-off we've seen in tech in recent weeks, you can see that Apple hasn't even approached its 23.6% retracement line. So you have to ask yourself, where would you like to get started? Now, Apple has already sold off more than 10% from its all-time high, but you have to remember, even though Apple tends to be a stalwart, when it does break down, it really does break down. And over the last few years, even besides the pandemic, Apple has sold off more than 30% from peak to trough. So keeping that in mind, it may be a good starting point to start anywhere we are right now, maybe around $162 or even around $160, but I wouldn't use my 50% allocation. I'd probably use something in the neighborhood of 25 to 30% since we are in the middle of a sell-off. However, how aggressive you want to be when it comes to building this position is entirely up to you. I'm just a guy on YouTube talking about stocks. Longtime viewers of my channel will know that I prefer to have a 50% allocation when I start, or a standard allocation, but never go all in. I like to have at least half of my allocation on the sideline to buy in stages as a stock sells off. In Apple's case, buying a 25 to 30% allocation would leave me with 70 to 75% of my money to be able to put into it as it sells off in stages. And since we no longer have commissions, there's no harm in buying a small allocation, even if you have a really large portfolio. After the initial buy at $162.30, I'd probably look down here to the blue line, which is the 200-day moving average, and you can see that we have a little bit of support up here at $149.94, which means I'd probably buy over $150 for my second buy. After that, we'd look for additional support, and you can see down here at $139.20, we we do have support down there, so that would probably be my third buy. Even though the 38.2% retracement does provide a lot of support in the past, since we just bought under 140, I'd probably overshoot this and maybe look down here at $129.21. After that, you can see that the 50% retracement line is what's next, and if you look in the past, we did get a lot of support down at these levels, and I'd probably be more aggressive and pick this point at $119 as my fifth buy. After that, we come up on our 61.8% retracement, but you can see in the past that Apple has found support above that line often, and I would probably use this point here at $107.32 as my next buy. We can keep making more levels, but you can see already at this point that that last buy represents a sell-off of more than 41%. And even during the pandemic sell-off, Apple only sold off 35%, so that might be the low target that I'd have for this position. The chances that Apple could sell off more significantly than that would require a story that affected the company specifically, at which point I might close the investment entirely. A market-wide sell-off is not likely to push this stock beyond a 35% sell-off. However, long-term viewers know what I'm about to say. I always prefer to have cash on the sidelines rather than be all in and have a stock sell off too much with me having no money to put to work. So personally, I'd probably create additional levels. And you can see down here we've got support at $89.15, followed by key support down here at $75.05, $66.36, and then the pandemic bottom at $53.15. From Apple's current all-time high, the pandemic bottom represents a sell-off of 71%, so the likelihood of that happening is slim to none. However, if you do want to be conservative, keeping cash on the sidelines in the event of that atrocity is something that you could do. From here, let's take a look at my own position on the chart, and since this is one of my oldest positions, I did first buy it in 2013. We're not going to go over every play, but I'll show you where I started and then we'll fast forward to the pandemic. I made my first buy in Apple on April 18th of 2013 down at $14.09 a share. And believe it or not, even then people thought Apple had gone as far as it could. And I know that sounds ridiculous now since Apple's up more than 10 times from there, but it's one of the reasons why Apple could still be a really good long-term investment. Many analysts and investors have a tendency to underestimate Apple's performance despite the fact that it consistently outperforms over and over again. So from here, let's fast forward to the pandemic and I can show you the moves that I've made since then. Before the pandemic started, my share price for my position was negative $39.53 a share. A negative per share price indicates that I've pulled all the capital out of the position in addition to enough profits that each share adds $39.53 to the portfolio's bottom line in addition to the value of each share. And despite being a high quality company, Apple was not exempt from the sell-off during the pandemic. I made my first pandemic buy in Apple on February 28th of 2020 at $64.99. This raised my per share cost to negative $28.32. I made my second buy in Apple during the pandemic sell-off on March 20th of 2020 at $58.24. This order raised my per share cost to negative $19.93. And the next day was Apple's bottom down here at $53.15, after which Apple really bounced and took off from there. Throughout 2020, we had no idea whether or not the market would test its lows, so I didn't waste time taking profits in Apple. I made my first sell on April 30th at $73.01. I made another sell on June 2nd at $80.58, and then I made a third sell on July 13th at $99.94. The combined sales lowered my per share cost to negative $62.52. After this point, I decided that I'd let Apple run for a while to see where it would go from there, and it ended up going much higher. Throughout the course of 2021, I realized I had too much of a cash hoard, so when I started to have the opportunity, I put money back into Apple to raise my position up as it wasn't an allocation size in the portfolio yet. I started adding into Apple during the tech sell-off early in 2021 with my first buy on February 10th at $135.74 a share, which raised my per share cost up to negative $55.80. I added again on March 8th of 2021 at $116.70, the same day that Apple found a bottom at $116.36. This isn't skill, that was just luck, and it raised my per share cost to negative $50.25. A little over a week later, I made another buy at $119.89, which raised my per share cost to negative $45.02, and I decided to let Apple go for a little while from there. When the market sold off in the fourth quarter of 2021, I made two additional buys, one on September 17th at $146.05, and another on October 4th at $139.18, which left me with a per share cost of negative $34.05. And this is where Apple really took off into the year end. Apple rose so far and so fast that it ended up growing beyond the allocation size of each position in my portfolio, so I had to take profits to reduce its size on December 10th at $177.30. This sale lowered my per share cost to negative $40.27, and from here my next price target for my position is $156.48. You can see that the reason I picked this price target is that we have key levels of support in the past where Apple has come down to that level and bounced. Additionally, that price represents a sell-off of more than 11% from where I took profits, and I always like to have at least 10% of a discount before I add back into a position. After that, I will keep adding to Apple at key points as it sells off, as this is a long-term holding and remains one of the biggest positions in my investments in play portfolio. For me, Apple's exceptional leadership and management has demonstrated that this company has the ability to act on new ideas and grow deep into the future. And because of this, Apple will remain one of the core positions in my investments in play portfolio. You can follow all of my moves in all of my portfolios where I update them each week 100% for free at www.getirk.com. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.